In this video, we'll explore the key differences between managerial accounting and financial accounting. Both play crucial roles in the business world, but they serve different purposes. So, let's dive right in. 1. Definition and scope. Managerial accounting and financial accounting are two branches of accounting, each serving distinct purposes. Financial accounting focuses on the preparation and reporting of financial information to external parties, such as investors, creditors, and regulatory bodies. On the other hand, managerial accounting concentrates on providing internal decision-making support to managers within an organization. Financial accounting ensures that the organization's financial statements are prepared accurately, reflecting the company's financial performance and position. In contrast, managerial accounting focuses on providing insights to aid in planning, controlling, and decision-making within the organization. 2. Users and decision-making. Financial accounting primarily serves external users, such as investors, lenders, and regulatory agencies. These stakeholders rely on financial statements, including the income statement, balance sheet, and cash flow statement, to assess the financial health and performance of the company. Managerial accounting, on the other hand, caters to the internal decision-making needs of managers within the organization. Managerial accountants analyze and interpret financial data, utilizing tools like cost-volume profit analysis, budgeting, variance analysis, and key performance indicators to support decision-making. 3. Focus and time horizon. Financial accounting has a historical focus, providing a summary of past financial transactions and events. It primarily focuses on presenting the company's financial position, profitability, and cash flows for a specific period, such as a fiscal year. In contrast, managerial accounting emphasizes future-oriented decision-making. It helps managers forecast, set budgets, and monitor performance based on current and projected data. 4. Compliance and flexibility. Financial accounting operates under strict compliance with regulatory requirements, such as tax laws and accounting standards. The financial statements must accurately reflect the organization's financial performance and position. Managerial accounting, being an internal function, provides more flexibility in reporting and analysis techniques. The focus is on modifying information to meet the specific needs of managers, allowing for customization and adaptability. 5. Conclusion. In summary, both managerial accounting and financial accounting play vital roles in the business world. Financial accounting communicates financial information to external stakeholders, ensuring compliance with regulations. Managerial accounting, on the other hand, assists managers in making informed decisions, planning, and controlling operations within the organization. That concludes our video on managerial accounting and financial accounting. If you want to download the PDF, go through the link in the description. We hope you found it insightful. Remember to like and subscribe to our channel for more informative content. Thank you for watching.